Got to tell you a story. So Mrs. Wright, she's cleaning out one of the cabinets the other day, and she pulls out this just acrylic cart of supplements. I mean, there must have been 25 bottle caps in there. And she said, do you need all of this, or are you still taking this stuff? And I got to be honest with you, most of it, I had no idea why I had it in the cabinet. I had no idea when I had bought it. And more importantly, I couldn't remember the last time I'd taken any of it. And so to that end, I said, yeah, probably not. We can get rid of that. And I know I am not alone. Well, I was talking to my buddy Gus Vickery about 3 years ago. He's a physician out in Asheville, North Carolina. He's kind of my personal mentor on health and wellness, functional health, cellular health. And one day we were talking about supplementation. And he told me, he said, I'm kind of frustrated. He said, I don't want to be a supplement company. And he said, yet every time I do a blood panel on one of my patients, they're leaving here with like 18 bottles. And he said, that's what it's taken for me to get their post follow-up blood work where it needs to be. They're going out here with 18 bottle caps. And he said, I honestly believe, based on the research I've done and what I know now, I think I could create my own formulation and take these 18 bottles and shrink them down to about 3. Now, being one of Dr. Gus's patients, that's where a lot of that acrylic crate full of all those bottles had come from. He had sent me on this massive shopping spree one day to get everything I needed to get my blood work to where he wanted it. And so my question to him was, well, why don't you do the formulation? Why don't you create your own business that actually gives the patients what they need in a much more efficient way? Because you know as well as I do, if you only have 3 bottle caps, you're much more likely to actually adhere to the protocol than 18 bottle caps. That's just overwhelming. Nobody wants to fool with that. Well, fortunately, he listened to his buddy, Jason, and so was born Authentic Health. Guys, listen, here's the thing. I don't start any day that I don't do several things. 1, I'm going to do my ice bath. 2, I'm going to do some breath work. 3, I'm going to read. 4, I am going to take my foundational stack from Authentic Health. I am going to make sure that regardless of what I eat for the rest of the day, and I do try to eat pretty well, but regardless of what I eat and drink for the rest of the day, I'm going to make sure I start it with my essential nutrients, my essential fats, and my essential amino acids every single day. This is just part of my life. It's like brushing my teeth now. I don't go a day without it, and it's all towards that goal of living life well and making sure that I am really dialed in on health span, not just lifespan. I don't want to just live to be a old age. I want to live to be a healthy old age. And to that end, one of my most strict adherences is to make sure I get my foundational stack in every single day. Here's a cool thing for you. If you go to Shop Authentic Health right now, you can use promo code Jason and you're going to get 10% off your order. Now, here's another good thing. I told you, I guarantee a lot of you open your pantry or somewhere in your house and you've got all these supplements and vitamins. You don't know what they're for. You've got some green powders. You've got all this stuff that you don't know why you have it. Get rid of it. You don't need it. If you will take the foundational stack, you will be leveling up to a physician-grade nutraceutical that is going to be a game changer. Guys, I'm 51 years old and I have more energy now than I had when I was 31 years old. My body fat percentage is lower than it was when I graduated from college. I feel better. I think I kind of look better. And more importantly, I just know that I am doing the things, I'm creating those building blocks that are going to help me live into a ripe old age. So check it out. Authentic Health, shopauthentichealth.com, use promo code Jason, and full disclaimer, I am an investor in the company, and that's how much I believe in it. Kind of like Victor Kayam used to say whenever he liked Gillette so much, he bought the company. That's what happened with me. I believe in Gus Vickery and his work, and also the work of Dr. Troy Jackson, his partner in his business. I believe in the genius of these guys and what they've done and the thousands of patients that they've helped get to a peak health state that I'm like, hey, I'm in, I'm behind you. So full disclosure, I am an investor in the company, and I'm grateful for Authentic Health sponsoring the Jason Wright Show. With that, enjoy this episode. Thanks. Russ Morgan, welcome to the show, man. How are you?
Man, I'm great. Thank you so much for having me on the show, Jason.
Brother, it's my pleasure, and I won't hold it against you that you're a war eagle. We talked about that beforehand. I went to, so I was the first member of my family to graduate from college, and I went to undergrad at a little school here in Texas, Stephen F. Austin State University, the Mighty Lumberjacks. And I always told my daughters, I said, like, hey, whenever you're able to go to college, as long as you can get in, you get to go there. And my oldest, she had a very strict criteria about choosing her destination for higher education. And it was a big SEC school. And Alabama won that battle. So, folks, just understand that we have some Alabama. And by the way, she's getting married. I mentioned this to you off camera that she's getting married here in just a couple weeks, and we have it's very Alabama themed. There
Mm.
there will be it's this over the top wedding. It's beautiful and everything, but also we got a little redneck in there too. We've got some good Alabama stuff going on. We've got some shakers. As a matter of fact, my wife just ordered at the end of the night. We're gonna have oatmeal cream pies and milk before everybody leaves because Nick Saban has two oatmeal cream pies for breakfast every morning, so it should be a big time. So anyway,
Oh man, that's good stuff. Well, I know that you got to make a lot of money to pay for those weddings.
dude, it's crazy. I'm telling you, Russ. It's and I'm not I am the least ostentatious guy that you'll probably talk to today, and but and you get caught up in this stuff, and it's been mind blowing. It has been mind blowing, and of course, if you're like you and I, and you understand the time cost of money, and just kind of you understand the true value of it, and all the other things you could do besides one night of the year to have just some big blowout, it hurts a little bit, but it's also your baby girl, so you want her to be happy, and that's what you do.
Well, I know you have a lot of people listening that are thinking, how can I be healthier? What
Yeah,
are the things that stresses me out? Well, I would
yeah.
imagine this has been a big one for you as well.
It has, but I tell you what, it's one of those things that I'm so glad I've got you on the show today because a lot of the principles that I put into play a long time ago are how we're able to pay for this thing and not, and it will be paid for. I don't borrow money. I stopped borrowing money a while back, which is something I do want to talk to you about. Now, I'm not saying that I wouldn't borrow money for business. I haven't in a long time, and it has hampered my growth. So let's just start there. So first of all, let's talk about Wealth Without Wall Street, which is your
Yeah.
program, it's your podcast, it's your wheelhouse. It's about passive income. It's about being an entrepreneur. It's about creating cash flow, all these things that I love to dig into. So, Russ, tell us a little bit about. I think the best place to start is, and I listened to a couple of your episodes of y'all's podcast.
Oh,
Let's
cool.
talk about infinite banking to start with. What is
Okay.
it? Let's define some terms. What is it? And give this audience an understanding of where you're coming from when you talk passive income and how you create it. And obviously, without Wall Street, in other words, doing it by actual direct investment, creating cash flows. What does that mean to you?
Yeah, well, and in order to tell you about that, I need to tell you the backdrop before that, right? So I was
Perfect.
a certified financial planner, got in the financial industry in 2004. So for, I don't know, 4-ish years, I was what they would deem an expert. And an expert is nothing more than a rising market, right? And when I saw the writing on the wall, what was happening with the global financial crisis, and I went to all the mentors I had at the time, Jason, and I started asking questions like, "Tell me why are we seeing this just straight down, and what's going to prevent it from happening again?" None of the people that I'd sought advice from all the way up to that point had any answers. And that's what told me immediately that the majority of the things that I had been taught were just passed down information. And there's a lot of people that were in the unknown and a very few people in the know. And I didn't like that. And so I went to a conference January 2009, and it's probably 400 different advisors, CPAs, CFPs, CFAs, financial advisors, insurance professionals, and so forth. And at that conference, there was a guy named Nelson Nash speaking on the stage, and he's talking about this idea of infinite banking and becoming your own banker. And this wasn't the first time I'd ever heard it, by the way. I had, usually he would get up, talk at this event because it was an event with a lot of different speakers from different times, and they'd go into breakouts so you could go deep on whatever the subject matter you were interested in. And I remember early on, maybe it was 2005, 2006, I heard him speak and I said, "What is this thing about?" And they go, "Oh, it's about borrowing money from a life insurance policy." I'm like, "Life insurance policy? What kind of life insurance policy?" "Oh, it's a whole life insurance policy." And I'm like, what kind of moron would be putting money into whole life insurance and borrowing again? Like, that doesn't make any sense to me, right? As an investment advisor, I thought that was the dumbest thing. Well, January 2009, I was like, okay, I'm open to any ideas because the ones that I assumed were the best were the things that I was having conversations with people of why is my account down 35, 40%? And, like this is money I'm supposed to retire on. How am I going to retire? I can't retire on this amount of money. Those are the very typical, afternoons for me. And that was very uncomfortable, right? Because I was supposed to be the one that knew what to do. And so I get this book and I'm reading it on the flight home. I was in Orlando, Florida. I live in Birmingham. And so 3 hour flight, 2.5 hour flight. And I'm flying home. I read this, 85-page book and I turn it over and just on the back of it, the guy had his phone number and his actual mailing address. And I found out later the phone number was his actual cell phone. It didn't ring some office, it rang his cell phone. And the address was Rocky Ridge Road, Birmingham, Alabama.
No way.
And I thought, man, is this not providential? God's obviously talking to me here.
Yeah.
And so I reach out to him and he answers. And I'm like, "It says you're in Birmingham. Is that right?" He said, "Yeah." So I was like, "Would you be willing to meet me for a hamburger? I want to talk to you about this book. I just saw you speak, last week." And that started up about a 10-year friendship. He was in his mid 70s at the time. He lived another 10 years before he passed. And I got to spend a lot of time with him. But I'm happy to go as deep into the subject matter as you want. But I wanted to give you a little backdrop as to where all this came from. And, obviously you asked the question of what is it? So really it's a mindset of where do we store cash? I think as business owners and successful entrepreneurs, we're good at making money, but we're also good at spending it. And a lot of times we're so busy with things that you just talked about. Like I got kids activities, all the things. And so the default for most busy, successful people is to put money into checking accounts, qualified plans, or the stock market. And I'm not saying all of them are bad in different ways, but a lot of times it doesn't give them the thing that they're looking for, which is the unbusy. How do I get some of the time back? And that's really what infinite banking started to do for me.
I want to hear all about it because I am one of those guys. The first time I heard of doing any of the things with regard to infinite banking that you're talking about was from Tony Robbins, actually. I think he talks about it in Master the Money Game or one of his books that I was reading, one of his finance books that I bought to listen to on walks. And that's whenever I first started hearing about it. And I was like you. I always grew up buy term, invest the difference. Life insurance is for when you're dead. It's not for you or so all I had grown up with a very skewed outlook on whole life. So let's tackle that. I mean, and I'm always open to hearing any strategy. And I think that's the thing, if I were to ask, one of the things I may ask you is like, and I can tell a lot about an investor if I say, "Are you a Dave Ramsey guy or are you a Robert Kiyosaki guy?" Somebody says, "Well, I like, Rich Dad Poor Dad. I like what Kiyosaki has to say." I said, "Okay, so you're going to be able to, you're somebody that's open to using leverage. I'm a Dave Ramsey guy. Well, I will not borrow money under any circumstance." I mean, Dave famously said here recently in an interview that if someone said, "I'll loan you $1 billion interest free, would you take it?" And he said, "No, I will not borrow money." And so that kind of tells you a lot. And I'm of the type, I'm not dogmatic. I think a lot of this has to do with your personality, your goals, and just what you think will work. I've done both. I have operated on a pure cash basis. I have leveraged. I bought my first business when I was 28 years old, and brother, it was fully leveraged to the hilt because that's the only way I was doing it. So, take us through kind of how you would execute this infinite banking strategy that you're talking about.
Well, there's 4 steps in it. We actually just did a video on how infinite banking works. So we do a lot of investor-based events, and people ask us all the time, "Why are so many investors using infinite banking? I don't quite understand it." And so we typically will break it down. And so we are actually doing a video series on YouTube right now, and we just did a
Okay.
video on how the infinite banking concept works. And so it has 4 different pieces. One is where you store capital. Second, leverage, which we're going to talk about leverage in a little bit different way. That's something I think you'd be okay with. 3 is deploying the capital. And then 4, where does the cash flow go? So when we talk about infinite banking concept, the cash has to go somewhere. Most people put money in traps, places they can't touch it. So when I talk about financial freedom, I don't define it as having a business worth $100 million or having a qualified plan with $15 million in it. I define it as having more passive income than monthly expenses, pure and simple. And that means it applies to the person making $100,000 a year or the person making 50 million a year, right? It doesn't matter because as business owners, we're built different than everybody else, right? There's 7% of us out there, the other 93% are working for us. So we are definitely uncommon in our thinking. And we're not going to stop working. There's nothing in the Bible that talks about retirement. That's a new age word, right? Created in Germany in the late 1800s by Bismarck, right? It's a way to
Okay.
figure out how to get the working force out because he couldn't figure out how to get the new people in because he never thought about capitalism the way we think about it.
Right.
Well, for us, right, we think about our capital needs to reside somewhere. If we're going to create passive income that exceeds our monthly expenses, that's not my term, right? Robert Kiyosaki is probably the most famous talking about it. And he says there's no good or bad investments, there's just good or bad investors. Well, in order to be an investor, in order to go buy those assets he talks about that creates passive income, you got to have access to money. But also, I'd say the opposite side is Dave Ramsey would say, hey, you got to get rid of your debts so you can free up cash flow. So our formula, the way we think about it, applies to both people because we're saying if we have dollars, is those dollars best used to either buy an asset that produces passive income or pay off a debt and reduce the monthly expense? Either way, we're getting closer to financial freedom as a result. And it's the formula that has served us well. We have a mission to help a million people get to that point. We've been doing this for a long, long time. I have a lot of people that are following us. And, thankfully, it's those stories that you hear when people have actually achieved it. But the first place is how do you get your capital? Where is it going to reside? So I said a second ago, you've got roughly $30 trillion today sitting in checking accounts, savings accounts, money market accounts. You've got another roughly $40 trillion sitting in qualified plans. And, the overall stock market is about $70 trillion. And obviously, most of that comes out of those qualified plans. So I tell people, if you're looking to buy assets to produce passive income or use those dollars to pay off debts, you need to have a better mousetrap. And what Nelson Nash identified is that he said whole life insurance companies have been around 200 plus years. They have to put the money to work to create a guaranteed return because the way the contracts are built, the cash value must grow each and every single year, guaranteed contractually to equal a death benefit at a future age. So if you're going to store cash somewhere, why would you not store it in a place that you can not only access it, but the benefit could go to you and get a bunch of the tax benefits that is afforded to the instrument that was created before the 1913 tax laws, right? So that's step one. Get your money in a place that you can use it. Well, leverage. All right. I do want to break down leverage because when you mentioned leverage a second ago, and I don't discount it, I think that everyone should have a standard in which they hold to and follow it. When we talk about leverage, we talk about borrowing money from the insurance company against the asset of our cash value. So, in certain situations, and Dave Ramsey in particular, he talks about in the early 80s, he started buying real estate and started borrowing money to buy real estate. And when the value of real estate went down below what he owed, he was upside down. Well, if you read Nelson Nash's book, Becoming Your Own Banker, he talks about that same time frame. He talked about owing $500,000 on a piece of property and interest rates went up to 26.5% at which he was borrowing at. And that put him in a very bad position. And that was where the idea of becoming your own banker actually was birthed. It was like, instead of borrowing money from traditional banks, why would I not create more cash values in insurance contracts that I have access to and can borrow against and never be held accountable to, meaning that you can never be upside down. The worst case scenario, they just take the insurance policy because that's all they're doing. They're using your cash value as leverage. And so the leverage inside an insurance contract is that I'm using my death benefit. I'm going to say that again. A loan and an insurance policy is actually a prepayment of the death benefit.
Okay.
And I think every entrepreneur listening to this will be like, wait a second, did he just say a loan on insurance policy is a prepayment of the death benefit? How many people have ever used their life insurance death benefit while they're still alive? Well, every single person who's doing infinite banking is using that because when we take a loan, we take a loan from the insurance company, don't have a credit check, no structured repayment, meaning I don't enhance my outflow every single month. The interest is due, it is interest only, and they will accrue it onto the balance as long as the cash value exceeds the loan balance. And that's the way it's built. The third piece is that I borrow that money. Well, what do I borrow it for? Well, I go borrow it. I go put it into assets to buy create passive income, or go pay off debts to reduce monthly income. And then the last thing is, where is that cash flow going to reside? Where is it going to come back to? And this is the mistake, I think, the critical mistake a lot of people make, unfortunately, early on in investing and other things in business, is that when money starts coming in from their business, they assume they can spend it all. They don't replenish their base.
Right.
And so infinite banking tackles that. Hey, you got to put the base back here. You can use the profit, but not the base. And then you just recycle it over and over again.
Okay, so give me an example of when I might use that. Let's say, and man, I probably as far as hard assets, I've done a lot of real estate investing. So I guess that's kind of an easy thing to do. Like, how do I get started with and like cash value? So if I wanted to go buy a whole life policy, the cash value means the amount of cash I've put in that's right. So, and what are kind of some of the returns that I'm going to get inside that insurance policy when I'm not touching it? Kind of take me through that mechanic. Is like from a mechanical standpoint, how much I invest, what's that life insurance benefit worth? How do I access the cash? And just give me some of those the actual hard numbers on that.
Yeah. So we have a process I encourage listeners who want to see it visually. Go to wealthwithoutwallstreet.com/PIOS. That stands for Passive Income Operating System. And I do about a 30-minute training that breaks all of what I'm about to tell you down, but visually. So if you're a numbers person, you like to listen and see at the same time, I encourage you to go there. It's free. But for what I'm doing is that I'm putting cash, as you mentioned, into my insurance policies, and insurance companies call that a premium. The
Yep.
average person would think about that as a deposit. Like, I'm putting money in a bank account, I'm putting money into my 401k, putting money in the stock market, whatever. I'm putting money in the insurance company. They think deposit in their mind. But you're buying an insurance policy. So there is a death benefit. So there's an expense. So when I put a dollar in, usually, again, age and a lot of other factors can go in this. Usually about 65 to 75% of whatever I put in, I could go to the insurance company within 2 days of it at check clearing and take a loan from them to go invest, right? That other 25 to 35% is going to be set back as a reserve, put away. Now, you asked about return. The insurance policy, the whole life policy, using today's interest rate environment, interest rate will dictate the overall return of an insurance policy, right? So if we were having this conversation in 1980, I would be telling you a much higher number, right? If I was talking to you in 2008, when interest rates went to zero for a long period of time, that number might be a little bit smaller. So interest rates have kind of crept up, kind of balances out. Today, we typically would say over a 20, 30-year period of time, the internal rate of return of your insurance contracts can be somewhere between 3 to 5% tax-free. So depending on what bracket you are, you can kind of do the net taxable equivalent to that. Now, how do I borrow it? So I call the insurance company, or the reality is today, I just go online and I tell them how much I want. I can't borrow out more than I have in there. So let's just pretend I had $1 million sitting in cash value. I could borrow out usually about 97% of that
Yeah,
with a
that's not
click.
$1 million you've put in. That's the cash value of the policy, or is that you've put in the actual hard cash?
That's the cash value. So
Right.
it could clearly, depending on how long you've had the insurance policy, your cash value would exceed how much you've put in.
Okay.
Early on, it would be less than what you've put in, right?
Yeah.
Because you have a startup cost, right? It's like
Mhm.
starting a business, right? We start a business, we put a lot of money and effort in for many, many years without getting all of that money back out. No
Yeah, so
different.
just so the listener knows, like, so I've gone and I bought $1 million whole life policy, and I've started investing into it. So I may have put $25,000 into it, but I've
Yeah.
got a cash value. It's a $1 million death benefit, right? So if
Yeah.
I die, there's that.
Right.
That's
Yeah, and so I'm gonna always refer to cash value. The death benefit is kind of the cherry on top. We don't
yep,
talk a lot about that,
yep.
but that is important, is that the what makes this different than the typical insurance most people have bought is that we go to our local State Farm guy, Northwestern rep, whoever it is. Again, great people, do lots of good things, but they're built to sell life insurance, right?
Mhm.
So they're going to sell you a life insurance policy like the Walmart shopper we are, meaning we want to put in as little as we can and get as much out of it. And
Sure.
so we think death benefit. We think, well, what is $1 million death benefit? What's the least amount? Well, the way that we design insurance policies is the exact opposite. We go to the insurance company and say, hey, I have $100,000 a year that I want to put into this. And by the way, I have an extra $250,000 lump sum I'd like to drop in it in day one as well. What's the smallest death benefit that you and the government will allow me to have? And there's actually a formula associated with that. And so they will drop it down. And the government actually is interested in how much money we're storing in cash values because we don't pay tax on the internal growth. We can actually borrow the money without paying tax on it. We can die and hand over those death claims without any federal income tax. So the government puts limits to how much you can do here. So that's why there is limits. And so we figure out what those limits are based upon the person's age, where they are with the goals that they have. Now that's how much cash value I have. So whatever the cash value is what I'm going to borrow against. They're going to ask me two questions. How much do you want? And which account do you want us to send it to? That's it. It's unstructured. There's no principal and interest payment. There's no credit checks. There's no 100-page document. There's not documentation fee, processing fee, origination fee, all the things that we've come accustomed to, right? When we're borrowing money. And as business owners, as investors, a lot of times if we have to borrow money to start up a project and it creates a cash flow drag on us where we have to start coming up with more money, that's a problem.
Yeah.
And this doesn't do that for us.
Okay. All right. So where would so and it's an alternative to that. So explain, like, if I'm looking, like, I'm thinking about things like this. So to protect my interest rate, I could go to a bank and drop 100 grand into a 10-month CD and borrow against the CD, but then I've got terms, right? Or unless I guess I could get a line of credit against it or whatever. Is that probably the closest traditional banking kind of alternative that I would look to that's kind of doing what this is doing?
Yeah, yeah. Somebody would say to me, "Hey, if I wanted to try to do this without insurance," and we have a lot of people, unfortunately, that can't get the insurance.
Mm,
That's an issue. I mean, I have a friend of mine that's has sold two different businesses for over $1 billion, and he unfortunately at 35 was diagnosed as a diabetic, and he can't get insurance. Now, he's been able to buy insurance policies on his wife, on his kids, on some business partners, but on himself, his limitations. So these questions do come up. What are my alternatives? And yeah, can you go and borrow money against, your stock portfolio in a margin account? Or can you, as you said, put money up in a CD or check account and borrow money against it? Sure. And some of the benefits that you get could be very similar. Some of them maybe not as beneficial, but yeah, there are alternatives.
all right. Now, one of the things that I learned that I didn't even know. So I spent a lot of time working in the United States Senate. And so I was part of the thrift savings plan. And of course, it tells you all based on how much you've got in there, what you can borrow against for a home loan or whatever. And a lot of people think, well, shoot, I've got a few hundred grand sitting there. And that's just like you said, it's real easy. Go online, they'll send me a check or wire me the money. But those come with some really strict stipulations that a lot of people don't know about. Can you talk a little bit about why that's probably not the best option, Russ?
Yeah. So the person who's putting money in a qualified plan, right? The regulations, as far as I can remember now. Again, I left my securities license behind me a long time ago. So if these are outdated, let me know. But that you could borrow up to 50% of what you have in there, not to exceed $50,000. They give you a 5-year repayment schedule. And basically, what they're doing is taking your money out of whatever active investments that you have, and then you're paying back principal and interest on the money. And your money is now moved out of the market and going back in there slowly. And for the person who really is desperate, needs the money, might be a good alternative, right? The reason why I have I say this all the time, and I'm unapologetic, if I can say that word, unapologetically, um, pro borrowing money from whole life and not from 401ks or those kind of assets, because those tools limit what we can do, right? I want to be able to have access to my money when I want it. And I say all the time that, 401ks are the worst tools for financial freedom.
Yeah.
Doesn't mean they're bad for people. It just means they're bad for people who want to become financially free because you can't get the money to create passive income today. You can't use it to pay off debts today. You can after 59 and a half, right? But not today. And for the person listening who's 40 years old, who's got a couple of kids, they're working as hard as they possibly can. They're tired of missing, activities. They're tired of feeling that they have to show up versus wanting to show up. They're saying, man, what can I do? That's the reason why I talk about those in a negative light.
And I have felt that. That's one of the things because I've been a diehard saver since I graduated from college. And then as you start to get older and becoming an entrepreneur, needing to access the cash and realizing whenever, as far as your liquid net worth, when it is tied up in these restricted accounts, it really frustrates you because you go into them with the best of intentions. I'd be thinking I'm being very responsible. I'm always going to max out my 401k. I'm always going to, I'll take advantage of whatever I can to shelter from shelter taxes, all that sort of thing until you realize I need to come up with some cash to get in on this deal. And like one of the things I learned, because I looked at that, I had all this money in that thrift savings plan. I thought, oh, well, if I just borrow that, the interest rate's nearly nothing, and I'm basically paying myself back. The problem was the entire principal balance comes due if I leave the Senate. It's not
That's
like
right.
it's a regular loan. If I'm 3
That's
years
right.
in, I got 2 years to go, I better come up with a check. And
Yep.
and also you just slow your growth. If that is truly money that it's kind of your set it and forget it money, you've kind of you've kind of derailed that plan. Now, one of the things I want to talk about, and by the way, I will put a link in the show notes so that people can watch these videos because there's no way people are going to grasp all of this right now through this
Sure.
conversation. But I do want to stay on some of these macro strategies that you have at a high level as to why you're looking at this because I love the idea. I know what we're about to talk about here with regard to getting to your financial freedom number. The thing I love about that is most of these people listening to this, if you and I were to say, so how much money you think you need to just, if you just wanted to quit right now, they'd say something like $5 or $10 million,
Right.
right? And I guarantee you they need a fraction of that to do
Yep.
the life that they want to do with off passive income. So walk this audience through that. So we've talked about the whole life being a strategy, infinite banking being a strategy. And we may come back to that and
Yeah.
as you give some of these analogies and descriptions, but tell this audience how you personally, if you were right now at whatever age you are and you decided, you know what, I'm in a job right now. I'm tired of it. I have to travel all the time. I want to figure out how to create passive income to cover my expenses with enough margin to do the things I love to do. How do you come up with what is that number and with some sort of accuracy?
Yeah. The easiest thing you can do right now is figure out what do you spend every single month, right? I mean, and it's for some people, they're like, "I've never done a budget." And I say, "Okay, well, just take your monthly go to your bank statement." I mean, it'll tell you, right? Like, just take the last 3 months and divide it by 3. I mean, it'll tell you how much money's coming out of there every single month, right? Assuming your credit cards and everything are being paid out of that bank account, it'll tell you how much money you're spending. You may wanna do 12 months if the last 3 months you've been on a, 3-month European vacation kinda thing, but it'll tell you, well, that's your number. That's your hurdle. And so all you have to figure out is how do I create assets that will produce more than that? My business partner and I in 2020, Jason, met a couple of guys that were sharing on their podcast their passive income report, and it inspired me. Now, their passive income was based upon affiliate sales and podcast revenue and ads and all these things, which was not our game. But I said, this is really interesting. People that say, "Oh, I'm going to go on this new diet, right? And I'm going to tell you about how much weight I'm losing because if I focus on it, I know it's going to happen, right? What you track grows or improves." I have a business partner say, "Yeah, but there's another rule that says what you track and grows, but also grows exponentially if you report on it to the world." And I'm like, "That's kind of crazy."
Mhm.
So in 2020, June of 2020, we put out for the very first time our personal passive income report, and it was a little over $2,500 at the time per month. And we've done that every single month faithfully for almost the last, what is that, 6 years. And now it's over 50,000 a month.
Wow.
And what I would tell people is that if what you focus on will improve, if you tell your brain it's important. You said a second ago, opportunities find cash. The
Mhm.
question I ask people is that if you don't have access to cash, where do those opportunities go?
Right.
They go to someone else's
Somewhere
cash.
else.
And
Yep.
so we miss these opportunities. People would say, "Well, Russ, you're on these podcasts. You've been doing podcasting like Jason has for the last 8, 10 years. You just hear all these deals." But see, the thing is that usually when people go out, they find somebody and they start talking about what they do for a living. They say, "Oh, I'm a physician, I'm an attorney, I'm an engineer, right? I own this business." I'm like, "Well, see, you're talking about the wrong things.
Mhm.
You need to tell people that you're an investor."
Yeah.
You start telling the world what it is, I promise you deal flow will come to you. I mean, the best thing that you can do is start finding out how to become a better investor, and you'll start seeing more deal flow. So we've had so many people from teachers to people driving skid steers to neurosurgeons. Everybody, right? Is not education based, it's want based.
Yeah.
It's getting your position of cash flow ready, becoming a better investor. All of these things are available to you. And I've seen people become financially free in a year, less sometimes. Some people may take the next 20 years before they get there. But you know what? They're tracking. They know exactly as a percentage how close they are, because all you have to do is take passive income and divide it into the monthly expenses. Let me show you the formula. $1,000 a month of passive income. If you had $10,000 a month of expenses, you're 10% of the way there.
Yeah.
You know immediately where you are in relationship to what the goal could be. And I think so oftentimes the financial world has convoluted the issue, made it harder, and sometimes maybe on purpose, right? Because they make money off the fees. Their passive income is called AUM, assets under management.
That's
And
right.
the longer that money stays in qualified plans, 401ks, IRAs, TSPs, or stays in the market, they collect fees and they go on amazing trips. They get to work because they want to, not because they have to. And there we are slaving to basically fund that vacation. And we think, oh, if I only got to 10 million, I could peel off 4% because that's what they say the safe withdrawal rate is. And maybe I won't run out. And then if the dip happens and okay, now it's no longer 10 million, it's 9 million. So I mean, all these things are issues that the average person is just dealing with and kind of get overwhelmed.
So let's do some. Let's say that you came up with. Let's give some. I mean, give somebody some actual, some tactics here. Like, let's say that you have somebody that's in their 40s or whatever, and their burn is, you know, $9,500 a month, mortgage. If they have car payments, all in $9,500 a month, and they've saved up a little bit. They've got, say 25 grand, 30 grand. And they're like, okay, I hear you, Russ. I like this idea. I know what my monthly burn is. So therefore I want to start taking steps to get to financial freedom by covering my nut through passive income. Take them step by step. What do they do?
Well, I'll give you, I think, three lessons I've learned, right? Over the last, I don't know, 9, 10 years, we've built over $3 million in passive income.
Okay.
So there's three big lessons I've learned through that process. And I'll give you some tactics behind it. The filters that we need in our life, the people, and the rules, right? So when I say the filters, I'm saying we need to have good frameworks. The average person doesn't understand how to create wealth because they've never been given a framework. So, one framework: financial freedom equals passive income greater than monthly expenses. That tells you everything. So, if I'm going to invest a dollar, is it going to produce a passive income? Or is it going to help me reduce a monthly expense? That tells me, is that good use of my dollars? If I can't answer yes to one of the two of those, don't do it. If that's your goal to become financially free. The other thing within that is that you need to understand who you are as an investor. And most people don't realize they have an investor DNA. Nobody's ever talked to them about that. But like I started learning this. So the first investment I ever made was I bought a single family property in Auburn, Alabama, my college town. And the reason I bought it because I had a buddy that had hundreds and hundreds of real estate properties, and he was financially free. And I thought, well, I don't need to reinvent the wheel. I'll just do what he's doing. And I bought that one, and I was bored to tears, Jason. I was bored to tears. I hated it. I didn't want to go buy 99 more.
Right.
It was not my thing. Well, I didn't realize that my profile likes to be involved. I want to have I'm a business guy. I like to have influence. I hate routines, right? I want to make spontaneous decisions, but I also want to figure out how I can influence the outcome. Well, I couldn't have told you that's what investor DNA was then, but it was, fast forward 5 or 6 years, we have a guy on our podcast and he's talking about short-term rentals, right? In every city you can think of. And I was like, I kind of resonate with that. So we took one of our long-term rental properties we had at the time and we turned it into a short-term rental. And immediately it clicked. And I was like, man, this is something I can talk about on our podcast. I can put out on social media. Hey, if you come into Birmingham, just go to wakeupinbirmingham.com. We've got units for you. And we went from 0 units to over 25 units within 18 months. We were producing over 25,000 net a month in passive income. Now, I wasn't doing anything. We hired an operator. The operator managed the business. We managed the operator. So I spend 1 to 2 hours a week with the operator talking about the financials, talking about the marketing. What do we need in place? What are new properties we need to be going after? And I thought, oh, this is my investor DNA. Well, everybody has an investor DNA and it will click with you right? So the person who's very analytical, who likes making, methodical decisions, they go, man, I don't want anything to do with short-term rentals. That would be a disaster for me. I love the idea of set it and forget it, putting money into a syndication or whatever it may be. And so that's one key, is that you need to know who you are as an investor. So we built out a tool called Investor DNA, which helps people literally matching up their personality profile with all these different investment opportunities that are out there. And what do you like about it? Like, what will be the pros to you? What will you not like about it? And then thirdly, what does it take to be involved? We were talking about kids a second ago. I've got an 18-year-old considering what she wants to do afterwards. I started asking her a question: what excites you? What do you want to do? And she can't tell me. So I'm thinking the last thing I want to do right now is send her to college, go spend $50,000 a year for her to figure out what she wants to do. No,
Yeah.
we're not going to do that. We're going to go intern in 3 or 4 different places over the next year. We're going to call that a gap year. And I want you to figure out absolutely what you don't want to do. So then we can start figuring out what you do want to do, and then we can go deep. Well, that's investor DNA, just in a completely different way.
Smart.
This The second part is investor buy box. Some people may have heard of this, maybe even potentially have it. Most people don't. Meaning, what goes in investor buy box? This is like, what sort of asset classes are you interested? You said real estate, but I know real estate is 45 different things, right?
Sure.
It's not just apartment complexes. It's not just single family rentals. It can be, land. It could be people buying properties and put them on short term rental. It could be self
Data
storage
center now.
facilities.
Now it can
I
be
mean,
this is crazy.
yeah, it's everything. Geography. How far am I willing to go for it? How much capital am I willing to put in it? Who's the operator within it? How quickly will it cash flow? Like, these are all questions to figure out, does it align with who I am? Does it fit my buy box? Does it cash flow, so that I can figure out the other part of this? So I said three things. The second thing is people. I've learned that you have to be the key ingredient in the people. So when I said a second ago, using Kiyosaki's quote, there's no good or bad investors, good or bad investments, there's only good or bad investors. You have to become a better investor. You have to know you personally, so that before you ever go invest in something else, is it aligning with you? And so we go through a lot of detail trying to figure out that. And I also think the people that you surround yourself with. So listen to podcasts like this, having other, experts that you can connect with, whether it's online in a community or somebody in your local space, that ups your game. And for me, I couldn't find that, so I started a passive income mastermind. I started, having people basically pay me to hang out with them, and more importantly, I was leveling up because I was hanging around people that were so much better at investing than I was, and so that people part was huge, because deals don't create passive income. People do. So you need to know the people in the space. The biggest risk will not be the market whenever you're investing. It's going to be the operator. So how do you know what what that operator involved is doing? Do you have great questions to ask these people? So I love to give these questions, because these are things that help. Like, if you're ever looking to invest in a deal, start asking questions like, who's operating this deal day to day, and what have they executed before? Because a lot of times people are not talking to the operators; they're talking to salespeople. How much of your own money is in this deal, and on what terms? Figure out, are you aligned? Right? Sometimes these people can make money even if you don't. That's a big problem. Uh, Another big one is, what assumptions does this deal require to work, and which ones can you actually control? Because they say big doors swing on small hinges. Well, I want to know, in every single investment I'm making, what are the one or two assumptions in the deal that are going to make or break it, right? Because sometimes a percent here or there can be either a really good deal or actually can flop. Then I want to know, show me maybe a deal that didn't go as planned, and how did you handle it? So if somebody tells you, well, I've never lost money, move on. Either A, they're lying, or two, they're brand new.
Right.
Because everybody who's ever been in investing loses money. That's just part of it. But what happened? How did they handle it? Right? I don't, a bad person can turn a good deal into a bad deal. A good person can turn a bad deal into a good deal. But if I'm going to be in a bad deal, I definitely want to be in a bad deal with a good person. And then the last question I love asking people, and this is probably the best question I've ever learned, is, how do I lose all my money? And when you ask somebody that, I guarantee you most of that stuff was not in the pitch deck. And they're going to have to tell you specifically, well, this would have to go wrong, that would have to go wrong, and this. And then now you can go do due diligence on how those assumptions, where are they? Can they go wrong? Would that impact you? So that's a big issue, I say, when I started doing this early on, I started getting into deals where I didn't have that operator experience. I didn't know that, maybe this person been investing for 20 years, but they just pivoted from doing fix and flips and the single family property and started doing multifamily, and everything was going up. And they had two deals that gone to completion, but those were only 2-year deals. And I'm like, oh, they're experts. And then I realized 7 years later, man, these guys don't know what they're doing.
Yeah.
As compared to, I'm investing now in a deal with a guy that has done over 6,000 transactions in this very space. And that very deal that I'm in is actually producing over $30,000 a month in passive income. So that's the second deal, is the people, right? The third is the rules. And for most people, the rules govern everything. So you play a game, you want to read the rule book ahead of time so you know what makes you win or what makes you lose. In investing, the rules are things like private placement memorandums. Those are legal documents, hundreds and hundreds of pages of legal documents that spell out all that stuff that you probably don't understand. And so we built out GPTs, we built out frameworks around that to try to understand what are the specifics in this and what is going to help me, right? How do I know in due diligence, am I talking to the right person? What's the rules in there, right? So when before I ever make an investment, I want my confidence to be that this is going to work out before the first distribution ever comes to me, because I've already done all that due diligence. I already have the investor DNA built out. I know the things I'm invested in fit my buy box. I'm prepared for the return because I've done and checked all those boxes. Now, I can't control the outcome, but I can control all of those elements. And as you and I know in anything, right? The experts in every single field, whether it's in sports or in business or whatever, the difference between them and an amateur is they just have hundreds or thousands or tens of thousands more reps.
Yeah.
And so I think for the person listening, like, start analyzing deals, start getting in rooms with people talking about stuff. Don't start investing right away, but start going through some of those things I talked about there. And if you will do those small things, now you can turn that 20, $30,000 you mentioned to me into real cash flow, because you don't always need money. Money is one element to get involved in deals. Opportunity. You figure out what a good deal is, you can bring the opportunity to people with money and still make money. Maybe you have the time to invest in it personally. Maybe you have the experience that brings to the deal, or maybe you have the relationship. So those are the 5 things to get involved in deals, and you don't have to have all 5. So people will say, "Well, Russ, it takes money, takes money to make money." Well, it takes money, but it doesn't have to be yours. It could be someone else's. So
Yeah, I could not agree more. I agree with everything you just said. In fact, that last part there, and this audience has heard me talk about it before, and I mentioned it to you. That first company that I bought when I was 28, I walked away from the closing table with $90,000 in working capital that was borrowed. I had to get real strategic, and I don't know if how old are you?
I'm
You're
49.
okay, so we're close to the same age. You ever remember Carlton Sheets? He used to sell these how to buy money real estate with no money down.
Mm,
Tapes, man. I ordered his cassette tapes. He was an old school infomercial guy, and I was negotiating to buy a real estate company here in Tyler. I was trying to get out of corporate America into entrepreneurship, and the reason why I was buying a real estate brokerage, low barrier to entry. Didn't have my real estate license or anything. But the guy I was buying the company from, he owned an office building that had the brokerage in it that he said was worth about $400,000 that he owed $56,000 on. That just came up in a conversation, man. And I'm negotiating this deal, and Russ, I have no idea how I'm going to pull it off, but I'm negotiating it as though just by divine intervention or something, I'm going to get this deal done. I wanted it bad enough. It wasn't about money. It was like, I want to get my daughters back to East Texas, raise them in a smaller town, be involved in my community, start my entrepreneurial journey. I want it bad enough that I just kept negotiating it like I had the money. Well, what I ended up doing is I'm listening to Carlton Sheets one night, and he talks about how if there's enough equity in the property you're trying to buy, you might be able to talk, especially if it's like it's paid for, you might be able to talk that owner into taking a second lien. You
mm.
borrow some of their equity, give them a huge down payment, and then give them an income stream later, by doing the owner financing. He's talking about that. I thought, okay. That guy said that building would appraise for around 400. He owes 56. Huh. I wonder. So I called up my banker in Sulphur Springs, Texas. I said, "Hey," I said, "Lee," I said, "I'm trying to buy this real estate company. He wants this for the brokerage. He wants this for the real estate. He only owes 56. What if I borrow 200 grand against this $400,000 asset? I pay off his note. I put a down payment on the business, a down payment on the building. I owner finance both of them after the fact." He said, "Well," he said, "Yeah, Jason, that's great if the building appraises." He said, "But I wouldn't do it, and neither is he, because he's going to have to take the second on the note because I'm going to be first if I'm the one loaning the 200,000 against the building." And I said, "Well, heck, that's the only way I'm getting this deal done." So I took it to the seller, and it was kind of funny, man, because I worked for Enron and WorldCom in the '90s. So the last being Enron. So this guy, fortunately, he knew I was a native East Texan. Otherwise, he would think, "Dude, you learned too much of the wrong thing at Enron and WorldCom."
Yeah.
But anyway, so I presented the deal to him, and he said, "I can't do that." It was his and his dad's business. He said, "Man, this is my mom and dad's retirement." And he said, I can't do a deal like that. It's too risky for me." I said, "I understand, but it's the only way I can get the deal done." Go away for like, man, it's probably 6 weeks. We didn't talk. And one day I am just in my quiet time and I'm praying, and I'm like, "God, I'm not gonna say anything about this deal. I'm not gonna say anything at all. I'm just gonna sit here quiet." So I sat there for about 15 minutes. Fireplace didn't light up, start talking to me. Nothing happened. And so I just got up. Like, "All right, you have nothing to say, Lord. I got nothing." I go to the office in Houston that day. Russ, I kid you not, 9:30-ish that day, guy calls me, says, "I'll do the deal exactly like you want it. Have your attorneys draft it." So that's a pretty cool story. But the point being, I end up doing exactly what I told you. I took this $400,000 asset. I convinced him to let me borrow $200,000 against his asset. I paid off his note. I gave him a big down payment. I gave him a down payment on the brokerage. And now at the ripe old age of 28, having never sold a house in my life, I own a real estate company in Tyler, Texas at this time. And I walked away from the closing table. I did the math so that I'd have 90 grand
Mm.
to put in the bank and used as my working capital, because even though the brokerage was making money, it was struggling. I mean, it's kinda where realtors went to die back in the day. It was an old Century 21 office. I
Mm.
mean, you walked in, dude, and it smelled like an old dentist's office, and I think the average age was about 68, and
Mm.
oh, it was that there was a computer room in the office, and the reason why it was called the computer room is because it was a room that contained the one computer in the entire office building, man. And so, but to your point, it worked, and what I learned through that experience and what I've told a lot of other would-be entrepreneurs, both young and older. I mean, there's a lot of guys that are close to our age that have been working a corporate job for so many years. They want to get out and do kind of the stuff that we do. And the first thing I tell them is like, first of all, you have to understand there's no real science to this. It's not like buying a house where there's very defined parameters about down payment, amortized mortgages. It's not like that. It's whatever you can sell the owner on. It
Yeah.
is, to your point, it's, does this business match your goals, both income wise and, hey, if you've spent 35 years in mortgage banking, and now you decide you've heard it's a real good idea to buy dirty businesses. So you decide you're going to go buy Bubba Joe's HVAC company. That's real well and good. You can put that deal together. But after Bubba Joe leaves, are those technicians going to want to have anything to do with you and your white collar self and your MBA and all that? Or can you? Did you grow up in East Texas and you can communicate with them? And you have to figure all these things out. Or are you just going to like that business, or are you going to get bored? That's the thing that I did. Just like you talking about buying that single family uh, house. I did the same thing in my real estate brokerage. The best part of it for me, Russ, was doing the deal. I mean,
Mm.
that was fun. It
You
was my
like the deal
first
making.
Dude, it was my first acquisition. But then once I did it, it almost came, and it was hard. It was a struggle. And I remember you'll appreciate this too. I remember calling up my CPA after that first year. And again, I was coming out of a Fortune 500 job and never had to, always sign in the back of my paycheck, not the front one. And when came tax time, that was a pretty easy gig at 28, wasn't making a ton of money.
You would get money back.
Get money back, man. And so that's the thing. I was like, "No, wait a minute. I called him up, Shane Warbach. He's still here in town. I said, Shane, I said, I got a question for you. I said, now I've never done this. I said, I haven't paid myself any money this year. I was living off that 90K and whatever else I could expense through that thing, just enough to get by. I was like, I haven't really made any money this year. What do you do? He said, well, he said, he said, you're probably going to be eligible for an earned income tax credit. And I said, wait a minute, isn't that for poor people? I said, that can't be. I didn't mean that to be rude. I was like, isn't that why that was set up?
Yeah.
And, but it's these things you learn as you go. And after I did all that, even though that was hard and it was challenging, after 2 to 3 years in it, I was like, I'm bored. And that's why I went to back dumb validation deal. I decided, well, I got to get my MBA. I'm going to get into private equity. So I go to SMU, get my MBA so that everybody think I'm real important and fancy because I got an MBA from SMU, which was so stupid. And what I found out, what's really cool about what you're doing and what you're teaching, and anybody out there listening, if you're thinking about graduate school, and all this, the links will be in the show notes. Probably be a lot, probably be a lot less expensive and a better investment to find out some of the stuff that Russ is doing because I went and got a 6-figure MBA with a bunch of people that I thought were all smarter than me. And what was really funny about it, Russ, is they were all in there because their companies were paying for it, but they all wanted to do what I had already been doing,
Mm.
which was they didn't care if it was a little broom factory, a hot dog stand, or something else. They wanted to be an entrepreneur. They might have a big title at Raytheon or fill in the blank, but really they were wanting to get out of that. And here I was already there, but I thought, but I got to be important like you guys. And so I think it's also after that big long diatribe, I want to circle back to I think it's very smart what you're doing with your daughter. Like I told you earlier, I tried to get Abby to take her college money and let's start a business. She didn't want to do that. I respected it. And both my girls have done fantastic. They're both graduated and doing well. But I think you're very, very wise. And hopefully, I hope in this gap year, brother, maybe she starts a business with you, or maybe y'all do something together, and she realizes, why in the heck would I ever go do that whenever I'm going to make more money in 1 year than most of these people that are graduating with bachelors are going to make in the first 10 of their careers. So well
Uh,
done.
I met uh, I I think girl, but she's a young young woman. She was probably in her 24, 25 when I met her, and she was making about $15,000 a month in passive income.
Wow.
And I was fascinated. I was at an event and was talking to her, and she had gotten her degree in engineering, living in Manhattan. And in her internship year, but right as she was getting ready to graduate, she went and interned with this company. And sitting around the water cooler talking to people after the weekend on Monday, they were all complaining. They're all complaining about the fact that they were back at work, and just, can't believe it's Monday again. And I think we've all been there. And she's sitting there, excited, right? Because she's about to finish school, so excited to go out and actually work in this profession, right? There's so many people that are so excited to go do this. And she's listening to what it's going to look like in 20 years right in front of her. And on the way home, she had the fortitude to start listening to ideas of how to build passive income. Somebody told her about a buddy of mine's podcast, and she invested like 10 grand of her money to go do this guy's course, buy his program, get involved in it, all the different stuff. And over the next 2 years, built up a little business on the side, like still working full time as an engineer, but doing this on the side and built up like 15 grand a month in passive income.
Wow.
Now she's at like 40 grand a month of passive income. She's still an engineer. And I asked her, when are you going to quit? She goes, I don't know. She goes, to be honest, I'm embarrassed because if I quit, people are going to go, what are you doing? And she's like, I've kind of not wanted to tell them about this other thing. And she's making more almost in a month than she's making in a year in her profession.
Wow.
And people, they ask me, is it possible? And I say, yeah. I mean, of course, there's tons of stories where people went out and did something, tried something, and failed miserably. That's business ownership. That's being an investor. But the best thing people can do is invest in themselves. Find ways to connect the dots for yourself, and as a result of that, get around the right people. And man, you might be amazed at what really is possible. And for everybody who's loving their work, like I will work forever. I love what I do. I mean, I'm in a position where I get to be the brand ambassador. We've got a pretty large company and people doing all the things, but I know that I'm called to be in service, right? That's what we're called to do as believers. This is to be service.
100%.
And but I also know that I can't be the greatest servant. Like, have you ever volunteered anywhere? And if you do it reluctantly, it's
Mm,
miserable.
yeah.
But when you get to show up and have fun and enjoy it, man, it's a blessing, and you're a blessing to other people,
Yeah.
which we're also called to do, right? So for me, I love this because people get to do it because they want to, not because they have to. And the more entrepreneurs we get to that point, then now what can they create? How can they expand? And we're living in a pretty cool time, right? With AI and all the things that we get to do now that we used to have to do with 100 people, we can do with one person, and we can create so much more. It's pretty amazing.
Well, a couple of things you said there. You asked me, so what do I want out of this podcast? Well, you just basically nailed it. And the fact that I get to sit down and do some iron sharpening iron with a fellow believer is always an absolute bonus. And so it's one of the greatest blessings to me. Another thing that you mentioned, I just was listening this morning to I was listening to Cal Newport's podcast. He has Arthur Brooks on, who Arthur Brooks has a new book out and about finding your life's purpose, that sort of thing. And one of the things he talked about was what you just mentioned. I don't know about you, man. Probably you with your kids, you hear this. My daughters, all their generation thinks that it's so much harder to fill in the blank. It's harder to find a job. It's hard to save money. It's hard to buy a house. And Arthur Brooks said, we hear that all the time, and it's just not true. And there are more opportunities now than there's ever been. I think back to buying that real estate business back in the day, man. I mean, there were so many stars that had to line up, and there was so much. I mean, if I had not been a fifth generation East Texan from Sulphur Springs, which is only an hour from Tyler, and had some sort of like connection to sell this owner on, I never would have got that deal done. And by the way, now you don't have to take that kind of vast risk buying an office, buying a business, and all that, and the employees and everything that comes. You don't have to do that now. You can do such smaller things that have such bigger impact financially. And I just hope everybody listening to this understands that, because it's really, really easy to become pessimistic and think, because there is a lot of craziness and awfulness in the world. But man, there's also a lot of great opportunity. It's an incredible time to be alive. So when I hear somebody else that gets that and realizes it, it's very inspiring, man. So here.
Yeah, man, no doubt. Big opportunities right now. I'm trying to teach my daughter. I joined a mastermind recently called Genius Network, and they have this thing called Genius Youth, and that's
Mm,
something that I want to get her involved in because it's getting the mindsets, the principles. We're actually looking at doing a program where she interns as becoming an AI integrator,
mm,
right? Like you talking about opportunity. Like, so many small business owners, mid-sized business owners are going to need to integrate AI to the business. They have no idea how to do it, and they don't have time to stop.
that's right.
And anybody learning how to do that could become a consultant in 5 or 10 businesses and make multiple six figures doing just that
Oh
while
yeah.
building things on the side. I mean, there's opportunities everywhere. And again, like you said, we always see the negatives, but man, the opportunities are abundant. You just have to be willing to look for them.
Russ, this has been a blast, brother. I'm so glad you came on the show. And I want you to tell people, I'm going to put as much as I can in the show notes, but tell people how they follow you, how they keep up with you, and if they're interested in getting involved in, and I know you've anything that has to do with Wealth Without Wall Street, how can they follow that and track you?
Well, I'll simplify it. My team built a landing page. Go to wealthwithoutwallstreet.com/healthy CEO.
Okay.
And everything we talked about today and more can be found on there. We do have a free community. It's got about 10,000, 11,000 people in it. Love for you to join that. If you don't have a group of people thinking about building passive income, greater than monthly expenses around you, you can join a virtual one. And yeah, we have podcast and YouTube and all sort of free content, paid content, whatever you want. We'd love to have you join the parade and be one of those million people that do become financially free as a result.
Fantastic. All right, brother. Well, thank you so much for coming on. And I'm not a transactional guy. I'm much more relational. So I would love to stay in touch with you. Let me know how I can support you. And again, as iron sharpens iron, brother, I'm here for it anytime.
Thank you, man.
All right, man. Thank you. All right. He is Russ. I'm Jason, and we are out. Thanks for listening. Well, that does it for this episode of The Jason Wright Show. Thank you so much for listening. This has been a Texas Titan Media production. Fourth Wall did the music. And as always, thank you so much for listening. Please consider going out to jasonwrightnow.com and signing up for the Vitruvian Letter. Also, please go out to iTunes. It takes like 30 seconds to just leave us a 5-star rating. It does wonders for the podcast. I would be so grateful. And with that, until we meet again, go crush it and endeavor to improve always in all ways. I'm out.